gentlemen, thank you so much for joining us on ET Now. And firstly, let's begin by asking about your Q1 earnings. Your margins have actually declined on a sequential basis as well as on a year-on-year basis. Is the higher raw material prices the only reason behind the same, or are there any other factors that actually led to this decline in your margins?
Yes.
Yeah. So the major reason is the raw material pricing, because what the material was purchased in the quarter of March 2022, which has been used in this quarter. So those are the main reasons for the declining margins. But for us, we have calculated the margins and we are at 29.25%, which is better than the last quarter. And yes, there is a decline from the quarter one, June 2021. But that is because of the high prices of the raw materials. No other factor is there, because all the other factors are very much in control.
I want to also understand about the other income, which was sharply higher during the quarter. What's the reason behind that, and what's the outlook on that going forward? Is this a one-off?
Yeah, this is a one-off because we have recently raised money from pre-IPO and IPO monies, which were not utilized and were put in some FDs and debt instruments as per the SEBI guidelines, and so there we have interest incomes. Also, there is a foreign exchange gain which we have earned on the closing debtors, and a certain portion is also the MES duty credit, which is also available on exports. This is also MES duty credit is also stopped and it is withdrawn by the government. So we do not see much of this other incomes continuing in future.
Right. Also, let's talk about the container costs. We've seen some reduction on that particular front. Has it already started trickling down onto your financials? And if yes, that's great. But also, by when can we see it reflect for us?
Costs, of course, they have started to decline, and as I said that we also in previous calls and interviews we are told that we procure raw material inventory which is kept for at least 4 to 5 months or plus. So the material which is purchased in this quarter will be used in the second and third quarter. So the impact of this will be seen in the second and third quarter, and the cost will go down for sure.
Aman, I'm coming to you next with regard to the revenue and the expectations going forward. There is, of course, the plan to double capacity, and this is by CY23 as I understand it. Could you give us some understanding as to where this stands right now, and what is the impact on an incremental basis that you will see on revenues going forward? Will you be able to see some impact of that in this financial year itself?
Yeah, first of all, thanks for having us. Much appreciated. But yeah, great question. The new greenfield production sites are well under control and on plan. The site number 3, which is the next greenfield manufacturing facility coming up, is ready from the civil construction. We are installing reactors as we speak now, and we are very much in line and on plan to start up the production by the end of this calendar year 22. And therefore seeing reasonable contribution in the revenues in the last quarter of this financial year, and so the first quarter of the next calendar year. And so we are looking at that. Also, we are going to start the construction in the next subsequent greenfield manufacturing site 4, after the monsoons get over, and we are currently lining up the documentation in place on that. And so that will be coming up by the end of next calendar year 23. And so this will these 2 greenfield manufacturing sites will more than double our production capacity in a matter of say 18 months from now. But the first one coming online this calendar year, contributing to revenues in the last quarter of this financial year.
Continuation to that, Aman, if you could tell us about your capex plans for the next 2 years. Have you outlined something?
Yeah, so the current greenfield manufacturing site is the capex is going on, and then the site 4, which will be the next subsequent greenfield manufacturing site, will be starting capex by end of this year, early next year, mid next year, and that is around 250 crores, and the current one is around 160, 190 crores, 170 crores or such.
Okay, so a follow-up on a couple of points that we've already spoken about, gentlemen. I think, Aman, you're best placed to talk about this. One, you said that there is an expectation that revenue will get incrementally increased on account of the capacity addition from this quarter, from this financial year itself, in the last quarter of this financial year. What is the kind of trajectory that you're seeing then over the course of this financial year? At the end of this financial year, where do you see it going on a quarterly basis? And at the end of CY23, therefore, with the doubling of capacity, where does that stand? And also, as has been pointed out by Faiz, you see raw material costs easing just a tad bit. what then is the trajectory or the range of margins that you're expecting in the remainder of this financial year?
Yeah, so in terms of, I'll answer the last question first. And the margins we're expecting to keep at the same levels at where we have been historically over the last 2 quarters. And so we are expecting the margins and the EBITDA margins to be in the range of 28 to 30%. That is the target, and that is we are firmly on track. I think the EBITDA in this quarter has been 29+%, and so we're firmly on track to maintain that EBITDA levels for the rest of this financial year. In terms of the quantum of the contribution of revenues coming from the new site in this financial year, I'll refrain from giving exact numbers at this point, but suffice to say that we are introducing 5 new products in the market for the first time in India, which are advanced intermediates for pharmaceuticals in India. A conservative market potential of these 5 products, which can be easily analyzed from the import data coming into India, is 1,200 crore rupees of imports into India. And so we are launching these products for the first time in India. We'll have 3 months of revenues from this new plant, and we will commission each product one by one. But the first one of those products we are actually commissioning as we speak in this month and the next couple of months in the current existing manufacturing facilities to kind of validate the process and streamline the process so that when the new production facility is up and running, we can hit the ground running with the production of this new molecule. And so we are definitely optimistic on the performance and the potential of this new manufacturing plant coming up in this calendar year, and hopefully we'll see significant contribution to revenues from that.
Quickly, double-digit revenues then on the cards? Double-digit revenue growth? You got to give us something, Aman.
Yes.
Double-digit?
Yes.
Okay. So that's the view. Thank you so much, gentlemen, for taking the time. Wish you all the best for the financial year going forward.